All right, everybody. I'm just going to make a quick video of the monthly dividends for November. My total dividends in November was $132.35. Made $21.89 for SPHD, $61.45 for RYLD, $28.31 for EFAS, $18.55 for KBWI, and $2.15 in my savings account. So that's all passive income, dividends and passive income. No quarterly dividend this month, but there will be quarterlies next month because in December, March, June, and September, I have a lot more ETFs that pay in those particular 3 months. No YouTube income this month, but possibly next month I might get 100 or so. Notice that in almost every fund here, I made the most in dividends that I ever have. SPHD went up about 40 cents. RYLD went up $20, although RYLD is staggered. Sometimes it's high, sometimes it's low. It is the highest it's ever been by about $3. EFAS is a little bit lower because I moved some EFAS to KBWI. So when you take these two numbers, they're bigger than these two numbers because of the reinvested dividends, right? We moved a little bit out of savings to help pay for my wife's nursing school. She has some equipment fees that she has to pay for, so took a little bit out there. So that's why the interest is a little bit less. Notice as you're growing your dividends, they're going to be increasing over time, and there's many ways that your dividends go up. One is by reinvesting dividends. You're buying additional shares each month or each quarter that will pay that additional income. Also, the contributions that you put in will obviously buy more shares, and if you buy them before the ex-dividend date, that will also get you more income in the future. And the growth of the actual ETFs. So SPHD is my lower income. It's about 4% dividends, but it should be growing more in dividends per year. RYLD is going to be very staggered because it's a covered call ETF. It's going to have some good months and some so-so months, so not really sure what's about that. EFAS is most likely going to be sold because it's a pretty high fee. It's 0.55%. I'm thinking about putting it into Maine Financial Corp, which has a very similar dividend structure, but I won't have to pay the annual fees anymore once I actually buy it, and it has a very good track record. KBWI should be pretty high dividends, about 6%, and should stay pretty close or slight growth on that. We also have VIG, that's the Vanguard International Growth. That will be, all of my YouTube income is going to go into that fund. Those are stocks that have increased their dividends every year for the past 10 years or more, and it automatically puts it in there. So that will be a pretty low dividend. It's about 1.8% or so, but it has shown a very good track record of growth in the dividends. So I want to get a good blend of good current monthly dividends. 132 I'm pretty impressed with and pretty happy with, but I also want to start looking into more funds that will grow the dividends a little bit faster over time, even if the current dividend is not necessarily as high. So Maine Financial and Big will be the two main areas there. I'm also reinvesting into these funds as well. SPHD over long term should be a pretty good fund for reinvesting the dividends. That should be about it for this month. Next month will be a bit higher because, again, it's that quarterly dividend. I'll take the annual total of the dividends, and it should be pretty close to around $2,000. That's all in passive income that all I have to do is leave it in the accounts, and it naturally grew on its own. So very exciting to see that about $2,000 will grow about 5% or so. So that'll be, do the math here, $2,000 times 0.5%. Should get an extra $100 or so in reinvested dividends next year without doing anything, and that's assuming that none of the accounts are growing in the dividends, which some should. So it'll be a little bit higher than that, and that's assuming no contributions. It's pretty likely we're not going to be contributing much to the Roth IRA in the next few years because my wife's going to school, and we want to try to cover all of her school costs without being in any debt whatsoever. Right now we have no debt besides our house. And we also have pretty decent equity in our house, about $40,000 or so. Considering possibly taking out a loan there, but I don't think we'll necessarily need it. We have a few grand in savings as well, and no credit card debt, no car loans or anything like that. So the goal is to make sure we pay for my wife's nursing school as much as we can without being in any loans. And then ideally in 2 years or so, if we could get out of it pretty much debt free or very close to debt free, her nursing salary will make us dramatically increase our Roth IRAs. We figure we're going to max out both me and my wife's and possibly do a 401k as well. So, any other general questions or thoughts, please let me know, and look forward to talking to you guys next time. Have a good one.